I think all of these treasuries around the world will ultimately be backed by Bitcoin. You couldn't do it with gold because it just wasn't physically and size-wise feasible. But for Bitcoin, I think it is. And I think it will literally stabilize all the world economies, because you have Argentina, for example, that goes into superinflation. You have Japan that has deflation, right? You have all these situations around the world because everyone's got their own issues with their economy and the stability of their currency. And I think what'll happen is you'll have it integrated into the US system first. I think the US Treasury will probably start to accumulate Bitcoin after you pass the market infrastructure bill.
Hey everybody, today I'm talking with Ryan Lane from Empery Digital. And Ryan, welcome to the show. And why a public equity? Why was that the right vehicle for a Bitcoin treasury?
Sure. Thanks for having me, Tyler. Good to see you. I've been running a hedge fund for about 18 years at the time we decided to do this. I'm a capital markets person. We've been funding public companies during that time. I've probably done over 2,500 financings within the public markets of my hedge fund, financing all these different situations. And we were looking at a lot of these transactions from our hedge fund perspective, and we just saw that there's a really efficient way to do this based on the domain knowledge that we had. And I saw a lot of treasuries out there, won't name any specifically, that just had a lot of expensive structures, right? They had asset management agreements, and they had other arrangements that just made their vehicles expensive to manage. And ultimately, what the objective of these vehicles is to efficiently acquire Bitcoin or whatever crypto is of interest to the management team. So for us, we said we can do that really efficiently. We don't need to use bankers. We know the markets really well. We know how to structure these things, and we can really translate every dollar that we raise in the public markets into buying Bitcoin efficiently, right? And if you're below NAV, you can buy it back efficiently to add Bitcoin per share. And if you're above NAV, you can sell stock and efficiently add Bitcoin per share. And we thought we had the right expertise for that. So we kind of put our team at the hedge fund into the public company for really cheap, and we're just executing that strategy. Hasn't played out exactly how we predicted, but nothing ever does, and here we are.
Absolutely. Yeah, you guys entered the space, certainly when the floodgates were opening, and totally makes sense with capital markets, positioned how they were. How did you guys go to market initially? What was the fundraising process like to get kickstarted on the Bitcoin treasury strategy?
I think we pulled off a minor miracle. We raised $500 million from the day we conceived the idea to the closing on the $500 million equity pipe within 6 weeks. From finding the public vehicle to hiring the banks to putting together the deck to putting together the team, putting together the board, raising the capital, and launching it as a DAT. It also speaks to how eager people were to put capital into these vehicles at that time, because you could obviously never pull that off today.
Yeah, totally, totally different environment today. You touched on already something I want to dig into about selling Bitcoin when it's advantageous based on your net asset value, and you've mentioned before how Bitcoin share per share is kind of that measurement for returns. Do you feel like your strategy was a little bit validated? I know this was always the plan for Empery, so no surprise to yourself. But to see how strategy came out in their recent earnings call to position themselves, I guess, more flexibly to be able to say, yeah, we're gonna sell some Bitcoin when it makes sense and when it's accretive to our shareholders. Do you see that as validation, or do you not care about measuring up to other Bitcoin treasuries?
Look, I think everyone should keep an open mind about all that stuff, right? You should never close off any angle that you may want to use in the future for the benefit of your shareholders. And so to ever say I'll never sell Bitcoin, it just doesn't make a lot of sense in the world that we live in, because you just never know what's around the corner, right? And you got to be able to be, flexible and adapt to that environment. And we've been doing this long enough within our roles at the hedge fund to know that things change. You could wake up tomorrow and things are different. So you've got to leave it flexible, and you've got to leave everything flexible, right? We've tried to do that across the board. I believe that through anything that we do and my team does is you've got to leave ultimate flexibility. So do I view it as validation? Not really. I just always believed it to be true.
Yeah.
And if you're below NAV, that's the math, right? You've got to fall back on the rational option, and the math says that's the rational option, and so that's what we did. I mean, we've bought back more stock than any Bitcoin treasury or any crypto treasury, any DAT, by multiples, because the math supports that. It supports it when you're materially below NAV, right? Once you start getting up to that, 0.9495, kind of where we sit today, it starts making less sense. And then are you really going to continue selling your Bitcoin when you're really just kind of reducing your scale and not doing things that are that accretive? So then you got to think about that. You got to play through all the math.
Yeah, it makes total sense, and that kind of piggyback on something I've wanted to ask you is, yeah, how do you balance, selling Bitcoin and maintaining scale to, build this into, a Bitcoin accumulation engine that can do more or, acquire more aggressively? And, what is the right size? What is, like a long-term goal for your company in terms of maybe the size of its balance sheet or what it can do in capital markets?
Look, we want to have a multi-billion-dollar balance sheet, and whether it's because we acquire more Bitcoin or because we use our balance sheet to acquire something else that can help us acquire more Bitcoin, with the objective in all cases to add net asset value, right? Increase the net asset value on a per share basis, and there's lots of ways to do that, right? And so that's the way we think about it. But if you get too small, then it's just not sustainable, right? You just can't keep the machine alive, right? So I think if you start dipping down and you're, below 1,500 Bitcoin or some, some number, depending on whatever the price of Bitcoin is at the time, you start dipping down and you fall into all these different regulatory nuances within the capital markets, right? You fall under 75 million in unaffiliated float, and you start, falling, off these shelf requirements that make it more difficult to get shares effective, to have universal shelves out there, right? We still have the luxury of having $1 billion ATM, $1 billion mixed security shelf, and you want to make sure that you're within that status, right? You don't want your audit fees to be a big portion. You don't want your legal fees to be a big portion of your assets. So I think you got to think about it in the context of all of that, knowing that when the time is right, you'll grow that balance sheet, whether you're adding Bitcoin or you're adding NAV in a different way. So and I think we're never going to be a company that is just going to sit on a bunch of cash, regardless of how we're generating cash flow.
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull the collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
That's interesting. So tell me more about, you know, weighing whether or not to sit on cash. Is that from your hedge fund background? It's like just productively putting that to good use. Is there ever a conversation with your team about, hey, Bitcoin's price is trending down. Maybe it makes sense to stash a little bit of a cash reserve and try to buy a dip, or how do you think about that framework?
In the context of this vehicle, I think about it as we are here to be a accumulator of Bitcoin. So I think sitting on cash isn't true to the thesis. If we can figure out a way to accumulate more Bitcoin without selling shares, I think that's really interesting. If we can figure out a way to sell shares really accretively, I think that's interesting. And I think you're buying Bitcoin. I think that if people want to hold cash, they can do that in their own bank accounts. Right? They'll own a DAT because they're adding Bitcoin per share, right? We can beat the returns of Bitcoin if we're doing our jobs well. So I think we have to stay true to the thesis, but you also got to be flexible of how you're doing that and how you're most efficiently doing that. And we've got some stuff up our sleeve that I think that will be interesting for the market to see in the next couple months, and it might change the way people think about these DATs. Right. What's the real purpose of the DAT? Right.
Right.
Is it to act more like a bank? Is it to act like an accumulation strategy of building NAV? So you're creating value for shareholders. And are you doing that only through the acquisition of Bitcoin? Or are you doing that through the acquisition of other types of assets that can generate income to buy more Bitcoin? Right. So I think you got to think about it more broadly, so you can really create value for shareholders, especially when we're in the environment we're in, where there's not a ton of excitement about owning these DATs. They're all over the map as far as where they're trading, and so that's telling you a story of there's not a lot of demand in the market to own all these because they're not all trading at or above NAV like they were last summer.
What lessons did you kind of pull, or what lessons do you think the broader Bitcoin treasury market might have learned from the last cycle? We had some multiples to net asset value just going sky high. And, that it would be surprising to me to see a repeat of that in the future, at least, at the scale, trading at 8, 9, 10, 12x multiple to your Bitcoin just seems
It's a lot. It's
not so,
illogical.
yeah,
Yeah.
yeah. It seems crazy. Was that a learning environment for the Bitcoin treasury, companies as well as the investor?
Look, I'm not going to sit here and pat myself on the back too much, but I will say when we were marketing, we said this trade is fat. It's not going to stay this way forever. We acknowledge that, and we're setting up this vehicle to be in a position to be able to beat the rest out when their expense load is too much of a burden when the NAV gap collapses, right? When everyone's trading right around NAV, how are you financing these cash burning entities? How are you paying these fees associated with your asset, right? 2 or 3%, right? These custody fees, which can be 50 or 100 bips at some of these custodians. All that stuff starts to add up, and the only way you pay that is either generating cash flow with the corporate entity or selling some of your asset to service that. So I think people learned that regardless of what market you're in, the fat trade is only a temporary thing. And so you've got to set up and prepare for that to not be there. And so I think investors learn that. I think some of the DATs are in litigation about some of their asset management agreements. I think people are going through that process now of kind of trying to fix some of those issues that are holding them down right now. And they'll work through them. Litigation takes a while, but they'll work through that stuff. They'll settle, they'll negotiate, they'll right size their organizations for the amount of Bitcoin or crypto they have on the balance sheet, and that'll work its way out. I don't think we'll ever see, like you're asking, that the craziness, the euphoria of that trade. That was irrational. But I can see people trading at 1 to 1.2 times NAV if they demonstrate a very, competent ability to operate the entities and add Bitcoin per share. Because it is easy to own a DAT. It's more difficult to own Bitcoin directly. It's difficult for some people to get their head around, to have these accounts, and to just conceptualize this thing that they have to be responsible for. It's not as simple, especially for the older generation, as just having a bank account where you can see your cash in the bank. So I do think the treasuries do provide some security there. Like, we're professionals, we diligence the custodians, we're looking at cold storage, we're looking at moving all these things around to multiple custodians so we can diversify our risk. Like, we have the luxury as an institutional mindset to manage that asset for people. And if we can do it in a way where we're also adding Bitcoin per share, there's really good rationale for doing it. So I think they will survive. I think there will be a place, but I also don't think you're just going to have a DAT that has no other means to generate cash flow.
Yeah,
because it just doesn't. You've got to justify your existence. You can't just be sitting on an asset, right?
right. I'm curious what you think about some of these so-called, Bitcoin treasury companies that do have like other operating businesses. Strategies operating business has been compressed to such a tiny fraction, of course, of their business. But there's other companies like 21 who's kind of yet to debut their Bitcoin treasury model, they're trying to be an operating company, and they're trying to be I would say, Bitcoin conglomerate. Is that a risky proposition for a company who's trying to balance this large Bitcoin treasury? Not specifically singling out 21, but a company that is trying to run this operating business. You could see how a large operating business with cash flows could be really accretive, to shareholders. But how do you think about that?
I think that, unfortunately, under the 1940 Act, you have to have an operating business, right? You can't just own this asset, right? So, but a lot of people have a business that's chewing up cash, and they're trying to manage that. And ours is chewing up some cash, and we're trying to, balance we need an operating business, but yet it's chewing up some cash, and it's, we've narrowed that, we've reduced salaries, we've cut a lot of stuff, but you've got to get it to a point where it's cash flow positive, right? And how much time do you spend on that? I think that's where you spend the majority of your time, is trying to figure out how to make that operating business work, because that's what makes the whole business work, right? That's what makes you an efficient accumulator, is to make that operating business work. And so if you have it and it's burning money, you got to figure it out. If you have it and it's making money and it's not distracting too much from the business, or you've got a team to run that, you've got a team to run the digital asset side, I think that makes a lot of sense. Because you can't, again, just if they do, get an exemption from the 1940 Act and you can hold these securities, you're still going to have burn, right? Because you're an existing public company, and so you've got to have a business that offsets that burn in some way.
Given your hedge fund background, do you think that's I think a lot of these Bitcoin treasuries came to market with, shall I say, some less experienced people running operations in capital markets, who maybe came from, just maybe a pure play Bitcoin background. You've talked a lot about managing costs, managing the legal side of things, paying for filings, and the cost of raising capital. Is that something that's easy to learn? How did your decades in, running this hedge fund set you up, specifically for this kind of trend for Bitcoin treasury companies or digital asset companies?
It's funny. I mean, I've looked at a lot of the resumes in this space. We were looking a lot at them when we were on the hedge fund side before we started this. And it's a very specific skill set within capital markets. You need to know all the ECM groups at all these banks, right? You need to know the bankers, the analysts. You need to understand how Wall Street works, how they get paid. People need to make money, but they can't make too much money, and it can't be at the expense of the shareholders, right? So you've got to understand all those nuances, and it can't just be reading a book or doing it for a couple of years. We've all been doing it for a long time. I've been doing it for 25 years, whether I was on the banking side or the hedge fund side. So, and I have dealt with a ton of the peers that I have in the DAT space, and they have a resume that makes them, appear the right fit, but you've really got to be boots on the ground in this space and understand it from, truly rolling up your sleeves and doing all the work. And someone coming from a, bulge-bracket bank where they're, a cog in a wheel, I don't think fills the role properly. And I'll respectfully say, I haven't come across anyone who I think has a grasp of it as much as we do, as much as I do. And it's not because we're smarter or better or whatever. We just have seen it all. We've seen it all over so many years. How many people are you going to come across that have done 2,500 investments within the public markets? We've seen everything, every different type of structure, every different legal nuance that you've got to navigate, and regulatory nuance that you've got to navigate, and personalities that you've got to navigate, right? We know everyone in the middle market by, close relationship. So I just think it fits, and it can't just be a resume builder or, a situation where you're familiar with it. It's got to be like deep knowledge.
Yeah. Makes a lot of sense. And, yeah, we saw some wild things happening in this last year, and there's some famous cases that we don't need to dig into. But I was looking at your board. I saw you have Ian Reid, former Pfizer, was he chairman, I believe?
Chairman, CEO. Yeah.
CEO.
Yeah. He's
talk
the real deal.
Yeah, I was gonna say, can you talk about like your relationship, how you guys know each other, and the rest of your board composition? How do you think about that whole board composition, and what's important in that makeup specifically for you, and I would guess the broader space for having someone who can help steer Bitcoin Treasury?
Look, on a board, you need all these different types of experience, right? You need people who understand crypto, people who understand, the infrastructure within crypto, and then you need the corporate governance side of it. They're both equally important. I would argue probably the corporate governance side is probably more important, because there's so much when you're running a public company board, and we've seen a lot of it through some of the stuff that's been happening to us. But Ian's a rock because he's seen everything at the Pfizer side. He's seen the activist stuff at the Pfizer side. He's seen COVID to some extent at the Pfizer side, and when you're embroiled in the politics of it, and then he's seen just all the politics of it. He's been close to probably the last 3 or 4 administrations. So I think that is a huge asset for a company like ours, and then having the crypto experience, because we're not crypto guys. We're hedge fund guys, and we understand it. But you really need someone who's immersed in that environment. And that's why we brought on Matt Homer and Rohan, and then obviously Ian for the corporate governance side of it, and really helping us run a good, efficient, proper board.
That's really cool. It's great to see that you have, I think, such a wide depth of knowledge, and really experienced team there, Ryan. You mentioned that not having the Bitcoin expertise. What is your background with Bitcoin, and was there a moment that you can recall when you're like, oh man, we got to get in on this trade? Had you had some experience trading crypto previously?
No, I founded the hedge fund with a partner, and he was more personally into the crypto than I was. And we looked at it from the fund perspective, but we're really conservative on the regulatory side. And what was going on with crypto under the previous administration and the administration before that. It was, they associated with Silk Road and a lot of the nefarious stuff, and it just couldn't rise, above some of those use cases. And the SEC was all over under Gensler, and there was a huge enforcement effort under Gensler, and it didn't matter if you were doing anything wrong or if you were on the right side of all the ethical and moral positions. They were still going after you. They were still creating a nightmare situation because they just had this very nefarious view of what it was and what it was used for. So we just intentionally avoided it. And as much as we liked it or thought it was interesting, and as much as we're economics guys, right? We look at the macro and microeconomic environment. You look at like the balance sheet of the United States, and it's effectively bankrupt if it was a corporation, or it is bankrupt, right? So you look at things like that. You look at the debasement of currency, and you see it makes a ton of sense. But as a hedge fund, as an institution that's registered with the SEC, you got to be smart about what you're doing. You got to, do things that, aren't going to create friction for your overall business, that are, responsible moves. So we were just responsible about all of that. And then when you had the administration change and, a lot of that enforcement activity, or almost all that enforcement activity, went by the wayside, and they wanted to become, the innovator in crypto in the world, then you think about, you rethink all of that, and you think about how can you get a lot of exposure really fast. And that's where we came to doing the DAT, right? We were one of the largest investors in our DAT as the hedge fund. We got exposure. We had exposure under a team that we trusted ourselves, right? That are going to run it right and run it efficiently, because we've seen so much public company crap, just company just milking the vehicle for salaries as a lifestyle company, not really advancing the interests of shareholders, not really acting in what we think is the shareholders' fiduciary, their obligation to the shareholders, acting in their fiduciary duty and creating value for shareholders. We're like, there's a good trade here. Let's do it ourselves, and let's do it big. And so we can kind of make up for all the lost time of not being in Bitcoin. And that was our solution, is going big, going fast. And
I love that.
That's what we did.
That's a cool story. How quick was that discussion, for finding an investment opportunity or exposure to Bitcoin versus doing it yourself?
We were looking at a lot of the DATs, like I was originally mentioning before, and it was literally just like an epiphany moment. Like, this is a really interesting trade. I love what's happening in the marketplace, but we can do it better. And
Cool.
It was literally just, I said in my office, we can do it better. And then I started thinking through it. I'm like, let's do this. And I just tapped a couple of my team members that I thought would be a good fit to, assist. And we off to the races.
That's awesome. That's
Yeah.
so cool. And you said what, like 6 weeks of putting it all
Literally
together?
6 weeks from beginning to end, like bananas.
Wow.
Some people planned it for 6 months and 8 months, but we have all the relationships and the contacts and just pulled it together.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch lending, simple terms, public pricing, market leading rates at every size. You can learn more at archlending.com.
That's really cool, Ryan. Thinking, reflecting on my own like Bitcoin journey, I didn't have the risk management that you had on a personal level. I've been, really into Bitcoin, and for a host of reasons. Like you said, the one of the biggest things is just seeing the way that our Treasury and Congress is spending money, and wanting to be part of a debasement trade. And then there's of course some ideological reasons why I think Bitcoin is a great part of that solution. And I've talked with people, for years about the game theory of this. And we were always hopeful, but it's like until the enforcement from the SEC, CFTC, really did change from the Biden administration to the Trump administration. Like you said, Gary Gensler is out of there. You also had, I think, big signal was, BlackRock entering the space with their ETF. But these were always things we expected to eventually happen. And over the past couple of years, when they finally did happen, that was just like, oh wow, this is, it was still kind of unbelievable to see. And I'm curious of your take, someone who maybe hadn't dabbled in crypto as much. Was it during the Trump administration when you finally like said, okay, we need to take a really a lot harder look at this, I guess? Was the regulatory piece the big epiphany for you, or are there other
Yeah.
factors?
The big piece was the regulatory piece. We couldn't genuinely entertain it, right? As much as it was, fascinating from a cultural economic perspective, and it made a ton of sense from an economic perspective. It just wasn't something we could put a lot of mind share into, because what was I going to do? I couldn't do much for my shareholders, right? And I really focus, my mind share on my fiduciary duty at the fund. And, we as individuals don't really trade much of the fund. We have our exposure in the fund. And, you want to stay focused on doing your job, and not trading your personal account and dealing with all the regulatory and nightmare stuff about that and the conflict stuff with that. So it just didn't fit. But when it did fit, then we made the move, and now we're seeing kind of the double-edged sword of that too, right? You fit this asset into the traditional finance world, and there's consequences to that, right? If hedge funds own it, they can manipulate it. They can do these things with this relatively nascent asset. It's liquid and it's big, but you can move it around, right? You can move it around with derivative trading, and you can position yourself to move the currency and make money on derivatives. And it's an age-old game that's been done in various commodities, right? And in various securities, right? The derivatives market is a much thinner market. We would watch, and the more immersed I got in the Bitcoin world, in the Bitcoin community, we would watch the way Bitcoin would trade when the U.S. markets were open versus when the U.S. markets were closed, right? And we saw the 10 a.m. trade, right? And we saw more than that, and we would scratch our heads and be like, this has got to be related to ETFs. This has got to be related to derivatives, and there has to be. And I'm not a conspiracy theorist person, but you just look at the data, and you just look at the trading activity and the quickness of the trading during market hours versus not during market hours, and it's just right in front of your face. Long answer to your question, but once we saw the opportunity to get in, we got in. It was validated. It's a massive asset, right? You can't ignore, a multi-trillion-dollar asset. That just defines itself as real right then and there. That's it. That's the beginning and end of your analysis if there's that much money in it. And then it's a matter of how big is it going to get.
Right. What is your long term like right size for Bitcoin? Obviously there's people come at this investment thesis in Bitcoin from a lot of different, I would say, backgrounds, attack vectors, and what the addressable market for the asset is. Where looking at price today, we're in the low 80,000s. We're at like a 1.6 plus trillion-dollar asset. There's been a long-term conversation about, Bitcoin being potentially digital gold. Of course, the gold market is, an order of magnitude plus 20 times the size of Bitcoin's market. Do you think that's a good comp for what Bitcoin can grow into? Of course, you have strategy who's trying to attack people who are looking for fixed income, maybe a slice of the bond market. People have talked for years about, can it demonetize larger assets like real estate over the long term? How do you think about it, like philosophically, Ryan? And also, what's realistic for, the size of Bitcoin, the asset?
So I obviously think about it a lot. Um, and here's where I come out. Bitcoin is a digital asset that will hold a ton of value in the future. I don't think it's much different than if you want to diversify your asset holdings and you don't want to be in USD because of the debasement, right? Just because of the inflation, you're going to be in a piece of property, right? That makes a lot of sense to have a certain amount of your assets in a piece of property. I think Bitcoin is the digital version of that. I think all of these treasuries around the world will ultimately be backed by Bitcoin. You couldn't do it with gold because it just wasn't physically and just size-wise feasible. But for Bitcoin, I think it is, and I think it will literally stabilize all the world economies because you have, Argentina, for example, that goes into superinflation. You have Japan that has deflation, right? You have all these situations around the world because everyone's got their own issues with their economy and the stability of their currency. And I think what'll happen is you'll have it integrated into the U.S. system first. I think the U.S. Treasury will probably start to accumulate Bitcoin after you pass the market infrastructure bill, right? And you have everything really well defined of how it fits into the system. And all this digital credit stuff, yeah, that's interesting, but that's just part of being in the system, right? Because what's a home? It's a form of people's balance sheet. It's a form of credit, right? That you can borrow against. Bitcoin is an asset that you can borrow against. Like this whole digital credit thing, it's interesting, but what is everyone really saying? It's just an asset that you can borrow against, right? It's just an asset that has a lot of liquidity and a lot of flexibility, right? You can't move your house from one wallet to another wallet, but you can do a quick claim deed and move it from one LLC to another LLC pretty quickly, right? It's just a more convenient way to do all of that stuff. And it's a really transparent way to do all that stuff. The open ledger system is beautiful. So I just think it's another asset that has, a very, very high ceiling, depending on how it all takes shape. And if you can imagine a world that seems kind of utopic where, every treasury stabilizes their own economy by owning the same asset that the US holds, right? Because if Bitcoin is held by us, it'll be stabilized. And if it's held around the world, it'll just generally be stabilized. And then if it's largely parked in treasuries, then the volatility will go down. And people talk about the volatility. It's, the volatility is too high for it to be an asset that, is better to hold than cash. But it's still going through that price discovery phase, right? And volatility is higher when it's going through that price discovery phase. And long-term volatility is always lower than short-term volatility because of that, right? Whether you're talking about a corporation or whether you're talking about a currency, it'll stabilize over time. And I think that's what'll happen. And it'll get parked in all these treasuries. It'll stabilize wherever that price is. You can, do your supply demand and figure out what that number is. But it's probably a pretty high number. But then it's just flat and it kind of sits there. And it just stabilizes all these economies around the world and makes trade and all that stuff much more simple and much easier. Right? You don't have all those currency fluctuations. It's sort of like the euro on steroids, right? That was meant to stabilize the European Union. You can debate whether it did or whether it didn't, but I think it's that same concept on a worldwide basis with something that actually works.
Yeah, I think that's great framing, Ryan. And do you think was the great financial crisis and, US's wars in the Middle East, um, were those essential to Bitcoin being where it is today? Like, did the debasement trade have to kind of go on steroids in the way that it did after 2008, to get us where we are today, or do you think this was always an inevitability?
I think it was always an inevitability, right? I mean, if you owned a dollar 100 years ago, it's worth a few cents today in equivalent terms. So we were always on this track, right? 2008 probably accelerated because they had to dump all this money into the system to save it. And I was starting my hedge fund literally in the summer of 2008. So I
Huh.
was just deep in it. Like we were just protecting, our cash balances. Like that's literally what we were. We didn't have any investments. We just had big cash balances because we took all the money in to invest. And I had wire instructions on my desk every morning to figure out which bank was going to collapse so I could pull my money out of there and stick it in one that wasn't going to collapse.
Oh
And
man.
it was like paper wire instructions back then. So it was literally cash management. And, banks were failing all over the place. Money was evaporating, and, the Treasury was propping things up, and probably should have propped more stuff up. So yeah, I think that it accelerated it, but it didn't put us where we are today. It just put us where we are today a little
A
faster.
little quicker. Yeah,
Yeah.
that makes sense. Yeah, because I mean, people have always, tried to certainly store their wealth, like you said, in property. There, I think the debasement trade is nothing new. It's just yeah, it's been light speeded, I think, in the past 15, 16 years. Actually, I guess I'm curious, what were the circumstances that you started your hedge fund, in 2008? That's pretty interesting timing, Ryan. I'd like to hear a little bit more about the background on that.
Yeah, so I ran a broker dealer before that. Slightly interesting story. I worked at a larger investment bank during 9/11. They basically said our building was One Liberty, it was right across from World Trade, and a lot of the shrapnel that came off the buildings when the planes hit them and when they fell shot into the sides of One Liberty, and so our building wasn't usable. So they basically said, go home and we'll call you when we need you. They kind of wanted to keep the organization together, and it turns out they were trying to sell it. So I got bored and I was like, okay, I'm going to start my own investment bank. I did enough at that investment bank to sort of figure out what it was all about, and started it up and ran it for about 4 years and built it up, but I didn't love it. I didn't love... on the banking side, you've kind of you find the company you're going to raise money for, and you got to figure out how to do it. Even if you don't like the company that much, you got to make your fee, and it just didn't resonate with me that much. But the people I was negotiating with at the funds that were investing in these companies, I was like, I like your seat better than my seat. And so I sat down with a bunch of them who became my friends, and I said, if you were to start your fund today, how would you do it? What would you do? What would you not do? What have you learned? And I went through that process for about a month in late 2007, and then convinced my partner who I launched the fund with to leave his shop and join me, and we started kind of putting the pieces together in early 2008. And then things started to deteriorate through 2008 as we were getting ready to go. And we had raised a chunk of money, and we were launching on July 1 of 08. Calls started coming in. I don't want to fund. I want to keep my money. Literally we had signed subscription agreements from some people, and they were just panicking because everyone was panicking. It made total sense. And we basically said, keep your money, watch us, and when you're comfortable, you can come in and invest and just sit back and observe. And so we ended up launching with like $5 million. Our goal was 50. But we're like, we got to get going because we got to start investing. We got to show we can make money. So we turned the lights on, started investing in July 1. And then we got a big investor on August 1st of 08, big family office here in the city, who we still have, and almost all of our investors from the launch we still have, and they've done really well, and they've stuck with us, and they got paid to take the risk. And then we had a lot of those people kind of roll in over the next 12, 24 months as they watched us execute, because we made money in 2008.
Awesome, man. Yeah, that's a really cool story. And yeah, I always love hearing those origin stories, because you're obviously so shaped by those times and, kind of growing up in the hedge fund space in this area of, bailouts and massive kind of liquidity over the last 20 years has to be really kind of influence you.
Yeah.
Um,
You
thinking of
become very paranoid.
Yeah, totally. Makes me think a lot of things. Thinking about, you're obviously way heavily in risk. What do you think about, political risk, monetary risk moving forward? Of course, we're getting a new Fed chair, and Kevin Warsh. A lot of his public comments have been, I guess, more hawkish in nature. Um, as someone who might serve as Fed chair, do you expect him to keep rates elevated? We talk about, oh, rates are so high, but when you were getting started in '08, we're, the 30-year Treasury, the 10-year are probably at similar numbers to '08. It's just kind of like these last 15 years where at historically, kind of high rates. Um, and of course, a lot of things have happened since then. Spending with the Treasury has gone out of control. Our deficit's been expanding greatly over the last 20 years. How do you think about how Kevin Warsh might operate as chair of the Fed? Um, kind of massaging interest rates. Do you think he's going to do a good job? And he's also said that he does want to kind of taper the balance sheet in at least past public comments. And, we know that can affect liquidity and put stress on, funds and banks. You know more about this stuff than I do. Can you, where you think, what are you thinking from your vantage point?
Look, that position unfortunately has become very political, right? It's probably not good for that position to be political. But I think if you just take that out of the equation, I think the huge difference between Powell and Warsh is that the new chair has a very different view of AI infrastructure and AI investing, right? And I don't think Powell was taking that into account. And I think Kevin's perspective on how that will affect everything is that it will be deflationary, right? Because you're going to have probably a lot of jobs fall off. And I don't say that in a negative way. It's jobs at these corporations, right? Because middle and lower management is, people who are producing reports and doing research and stuff like that. Each human is so much more scalable. And we use a lot of that at our shop. We so much more efficiently do research. And we may not let anyone go, but we're probably not hiring as many people as we would otherwise hire. And the bigger corporations are letting people go. And I think he sees that, and he sees what impact that's going to have on the economy and over the system and how it operates over the next 10 years. And I think he's going to get a bit ahead of that and probably, be more into cutting rates than Powell was. And I don't know if he's going to rush to judgment on that, but I think he's much more open-minded to that. And I think we'll likely have lower interest rates under him than we would have had if Powell stuck around. So AI investment, the AI infrastructure build out that's going to happen in this country over the next 10 years is going to be like the Rockefellers and the Vanderbilts building infrastructure across this country, except the digital version of that. I think people will look back and they will see literally trillions of dollars that are being spent, right? We've got the digital currency, and now we're going to have the digital revolution of AI. And it's very scary elements to it, but there's really exciting elements to it as well. And I think it'll empower entrepreneurs, right? My son started a business when he was like 10 years old. And he has all of these tools at his fingertips that I never had, that we never had when we were his age. And now I just see him doing all his research on these, on these chatbots and these AI, LLM models, and he's getting really good answers. He can, do all this analysis, whether it's for his taxes, whether it's for forming a business. He can automate so much stuff, and he can literally be in high school and run a full 3D printing business that is mostly automated out of our basement. And it's just a phenomenal tool for entrepreneurs, right? Because you don't need legal in it. You don't need a lawyer to start a business anymore. You don't need an accountant to be able to figure out a lot of the aspects of accounting with respect to the business. You can do all your marketing yourself. You can set up marketing agents and all this stuff to do all this analysis, to manage your inventory. It's really quite amazing. And as a single person, you can leverage the best within each industry as an agent, right, to inform you and make really good decisions. So there's going to be this chopping of this corporate middle and lower end, but I think you're just going to have businesses pop up everywhere because you're leveraged to the system, which I think is really interesting. And I think Warsh sees all of that, through some lens that he's, some of his own perspective. And so I think it'll be interesting. I think he's a good pick. I think he's got enough of the, economic background and enough of the common sense and practical knowledge to do a great job and hopefully keep it apolitical.
Yeah, it would be interesting to see how apolitical it can be. There's obviously from the administration a kind of heavy-handed, Powell was able to, I guess, to resist it from this administration, at least partially. And I think Warsh, will find ways to certainly operate without taking too much heat. It's interesting.
He's voluntarily stepping into it, though.
That's true.
So
yeah, who knows what was said behind closed doors too? But yeah, we'll see. It's interesting your comment on AI. It is absolutely crazy to just see how it's like you don't even have to like find the experts anymore. It's like what search did with the internet. Just AI, I think, is just chatbots alone are another level beyond that. It's just crazy how more productive I am, how the rest of my family, I've got a daughter entering high school soon, and yeah, just crazy to see them go to work on it.
yeah, it's such a phenomenally powerful tool.
Yeah, you mentioned how deflationary AI, all technology, of course, is for us, but AI is going to. I think I agree with you that it's going to take it to another level. Do you view AI as kind of a bailout for U.S. debt financing in a way that Warsh um, and the Treasury will be able to finance debt at cheaper rates that they otherwise wouldn't have? I guess were we stuck without AI?
I'm seeing it, right? I'm seeing it from my perspective of if you have corporations being willing to write such big checks and have such huge balance sheets like a NVIDIA or a Google or a Meta, and they're backing these data centers, and people are financing these data centers off their balance sheets because they're the ones, they're the off takers of the data for training and inference models for all these LLMs, like that is right. You'll have cheaper debt, you have bigger balance sheets, and you have these big balance sheets, funding the ecosystem too, right? So you have tons of dollars being put back in the ecosystem and tons of dollars being leveraged in the ecosystem. So I think, and that there's just so much cash flow, right? The hyperscalers are willing to pay so much money for access to land and power and water, right? And they want to build these, multi-gigawatt data centers within these campuses around the country. And people are like, I'm worried my power rates are going to go up. I don't think people, that seems like a straw man type argument. I think the reality is that It's going to help all these local and municipalities and federal, state governments and federal governments. I think it's going to generate a ton of manufacturing, right? When Trump was originally talking about bringing manufacturing back to this country, I think what he really should have been talking about was, the labor needed to build data centers. Like these are highly paid, skilled, engineers designing, how these things are laid out. These utilities are providing power, and it's, under class rates. So the rates really aren't going to go up. And I think people are a little confused as to, what the shortage is, because it's not generation. People think there's a power generation shortage. It's not. It's a transmission and distribution shortage, right? That's the infrastructure to get it to the data centers in the amounts and quantities that are needed to power these, extremely, energy consuming chips, right? These GPUs are just buzzing, right? And they're running off the same power that your dryer at home is running off of, right? These are not just, low voltage GPUs. These are machines that are just spinning out data. So I think that it will bail us out of, to some extent, the debt and the overhang, and it will help the economy. And the U.S. should be not only a leader in crypto, but it should also try to be a leader in AI and try and push a lot of this red tape to the side, so we can, enable our economy to really just flourish, and then thereby enable the entrepreneur to flourish as well by using all these tools and being a leader within all these, different tools.
Yeah, I hope you're right, and I hope we get to there. I hope we find a path without like lifting, supplemental leverage ratios for banks, because I think,
That
there
stuff's
there
stupid.
could be
Yeah.
some there could be some big problems there,
Yeah.
with yeah. So we don't want to see things blow up. In Bitcoin, sometimes, a lot of us um, do kind of look at the worst case scenario sometimes, but I think Bitcoin has a value proposition, regardless of how this thing plays out. I think you're right about the game theory. I think Bitcoin. I think Michael Saylor's really great when he talks about Bitcoin becoming, digital capital that, kind of the whole world can build on. So, Ryan, is there anything we missed that we should have talked about with Empery Digital? And tell our viewers where they can find more about your company and follow along.
Yeah, you can go to Empery Digital, our dashboard. You can just Google that Empery Digital dashboard and follow us. We put all our metrics out real time, and it pulls from our custodian, and we update everything on a daily basis. So follow us there, and we do some posts on X, Instagram, and you can follow us there. You can just look us up there.
Definitely check them out. We'll put that on the screen and in the show notes. I think a lot of Bitcoin treasury companies are, one of their value props is they're quite transparent, but you guys are one of the teams doing it best. So I really appreciate that. And thanks for joining the show, Ryan. One thing I have all my guests say before they leave is stay orange.
Thank you, Tyler. Stay orange.
Ladies and gentlemen, Ryan Lane.